Hello, this is Brandon from Galaxy Stock Market. Welcome, members. This is a week look-ahead video where we're going to be looking at the FOMC rate decision coming up next week and how to trade. And today is September 13th, 2025, Saturday, about 9:33 a.m. as I bring you this video. Here's the disclaimer. Pause it, read it. If you agree, please move forward. And of course, this is for non-members. Follow us at x.com/galaxy.market. We have a lot of great content. Also, subscribe to us on youtube.com. Share, like us, and comment. Thank you very much. All right, so basically last week we talked about from global markets investors, and we're looking at the U.S. commercial mortgage-backed security, which is one of the canary in the coal mine for office spaces, has spiked to 11.7% all-time high. We talked about this. The MBS delinquency rate is a strong barometer of economic health and stock market turns. Well, right after that's happened, we have a subprime crisis in the auto subprime lender. And typically, the Tricolor Auto, which is the largest subprime auto lender, was basically doing what mortgage banks were doing back in 2008, packaging subprime asset bonds into AAA grade loans. And of course, the rating agency KBRA basically looked the other way, and the fraud continues. And this is what happens when you don't hold the industry accountable. However, this is the second canary in the coal mine. It's like deja vu all over again, 2008 style. When are you going to look at all of these things that are happening and then start realizing that maybe we are near the market top and that nothing is right at this point? Okay, contagion is all but guaranteed, not just in the subprime area and with the CMBS market that we talked about that I just showed you. It is getting dicey out there. And what is getting dicey? All of these debt situation, including our U.S. Treasury debt, 10-year yield that I harp on all the time, which we'll cover in a bit. Okay. And then, of course, last week we covered that the U.S. jobs report revised another 27,000 jobs lower for June. Remember that? We talked about that. Then we basically get this situation where the BLS non-farm payrolls earlier this week, they revised it down to negative 911, almost a million jobs. Okay. What does that tell you about BLS? Okay. That the statistics are not real. It is all made up, and they keep revising it down to fit a narrative. Okay, and that narrative is to keep you, the retail traders, people like me and you, calm while the big boys dump at the market top, which we're at right now, folks. So I talked about Fed rate cuts ahead, right? And so the question that we want to ask is, will they or won't they cut? Of course, the markets are pricing in a very large percentage of a 25 basis point cut. And of course, the question is, are they going to cut 25 basis points? Are they going to cut 50? Are they going to cut 100 more? Trump thinks that we should cut 100. Percent wants 50. BlackRock wants 50. Okay, I think Jamie Dimon wants 25. But will it be enough? That's the question. Or if we do get the rate cuts that we want, is it going to be sell the news? And that's the thing that I want to talk about and do my analysis, and maybe you can see what I see. All right. So right now we have the Fed rate cuts of 25 basis points. 25 basis points, all but guaranteed at 93.4%. 50 basis cut is 6.6%. And of course, the question that emerges is, what if Powell, citing while there's material weaknesses in the job market, the markets are at all-time highs, and there is abating inflationary pressure, but it's not enough to cut rates. Maybe we will stand pat and watch. Okay, highly unlikely that's going to happen, but if that happens, you could kiss the stock market goodbye, right? And there are divergences everywhere in the stock market. We are at all-time highs, and breadth is terrible. There is just absolutely divergences in the PPO ADX crush indicators and the put-to-call ratios, just going down with all the canary in the coal mines we just talked about as well. Of course, the other situation is the fact that fear and greed index, right? It's a neutral. I mean, how can this be when the market is all-time highs and Fed is about to cut rates unprecedentedly and market all-time highs, potentially triggering even greater stagflationary or worse depression problems? When you look at these fraud that's coming up to the surface and, these debt issue problems that are contagion is all about guaranteed. Okay, so markets are at historical all-time highs and sentiment is divergent also. Okay, so what are we going to do? Well, then we need to look at what's going on with the dollar and the 10-year yield. The dollar continues to move lower. Okay, this is devaluation of the dollar. When you print so much US dollar that it's saturated the entire system, the dollar ceases to circulate, and you're going to start getting devaluation of the dollar, and then the behavior of the partner countries globally changes from country to country, and that they are going to be looking at alternative sources of trade currency. Like, for example, BRICS is coming up with their own coalition of currency. They're talking about their own exchanges and trading amongst themselves. And the petrodollar, which died with the Saudi Arabians not renewing the petrodollar contract with the United States, I think that was 2 years ago. Nail is in a coffin. I mean, the proof is in the pudding, and this is why the Trump administration is getting more protective, threatening war everywhere. With Venezuela, Panama Canal, annexing Canada. Remember Greenland? Those are all in play right now. Now, 10-year yield, however, is the big deal. It is basically telling us certain things right now. If the market, remember, this is futures, and so that this TNX measures the 10-year yield, Treasury bond yield, a benchmark. If the market is suspecting that a rate cut is coming, but we just have a hard time breaking below 40, right? I've always said that the Fed needs to bring this rate down to 36.5 or lower to save the banks, because right now at these levels, even here, I know it's come down a little bit on that news. Now we're beginning to rebound. All banks are functionally insolvent. Okay, so the market has priced in a 93.4% probability of at least a 25 basis point cut on September 17, 2025 FOMC meeting. But I believe Fed has lost all credibility at this point, and I've always said this, and I'm going to maintain it. Fed is screwed whether they cut rates, hike rates, or stand pat. They're going to get blamed for the crisis that's coming. Okay? The US dollar and TNX tells a different story about the market optimism, doesn't it? Okay, so what could go wrong when the Fed cuts rates and market at historic all-time highs? Breath is terrible. There's divergences everywhere, and they're going to cut into an inflationary environment in the name of jobs? I don't buy that. Okay, so will it matter that the Fed cuts rates, or is Trump right that Powell is too late? Well, let's just shift our attention to silver, because silver is another canary in the coal mine, and it is one of the most suppressed assets in the world, where the big banks, the silver slam crew, collude together to trade amongst each other to suppress silver prices by naked shorting, paper shorts of amounts unimaginable to human eye, human mind. It's unfathomable what they're doing. All they're doing is building energy, coiling that spring, and when the margin calls come in, and when that system breaks, and I think we're there right now, I think the parabolic move that's going to come is going to be biblical, folks. All right? Biblical, I say. Now, this was from last week. I said at 41.51, slamming is not working. They were trying to basically slam it below this dotted line here. We're way above that dotted line. We got over that psychologically important $40 level, and now we're over that 42. And I've always maintained, if you go back to x.com, I'm talking about $40, 40.002. This level is the launch point. for parabolic moves, but $42 staying above there, all but guarantees that the slam crew are going to have a ton of pressure with margin calls coming forward. Okay, they are slamming paper shorts. Okay, remember what happened to GME when all of the insiders, all of the hedge funds, and all the private equities, and they all got burnt by a bunch of crazy retail traders at wallstreetbets.com. Okay, similar issues are going to happen here, and the system is broken, folks. Silver Slam crew, gold too, is in serious trouble. I've been saying this for a long time. Gnashing of the teeth moment is upon us, folks. And maybe that coincides with the FOMC announcement. Who knows? But the fact that gold is hitting historic all-time highs, hit 3,700 plus, and then pulled back a little bit. It doesn't go up in a straight line last week. And silver is about to explode higher. What is that telling you about the broader economy? Does it even matter that the Fed is going to cut rates? We talked about this from last week, the minimum measure move. I think when that move comes, because we are above that 42 level, we briefly hit 43 on silver, okay? I think it's very possible to hit 50 plus, and I think in that move, in the next few weeks, I think we're moving to about, somewhere between 50 to 75, okay? And this was derived from the 1980s when the Hunt brothers tried to corner the silver market. Of course, they got caught doing it, but they had a whopping 625% move all within a few days. Okay, silver is the most suppressed asset in the world. So why do I think this phase will go to 75 or higher? I just talked to you about it. Okay, we talked about the Hunt brothers. Current model right now, this model's only 85% move. It is the most suppressed asset in the world. If you think I'm crazy, I'm saying this, I'm not. Okay, here's the cup and a handle. We talked about that. Here's gold, not to be left out. I mean, a few weeks ago, this is about a couple weeks old. It was at 35.16. Gold has been making all-time highs every 2.8 days. Now all-time high is down to about 5 days. Every 5 days, gold seems to be making new highs right here. 3,500 to 3715.2, pulled back, finding support at 3680.7. It's moving higher, folks. This is headed to 4,000. Okay, here it is. All-time high. We just talked about that. And then let's go to XRP, right? XRP, there's no one in line at 234. And I'm guaranteeing you, most of you are going to be in line at 1,000. Okay? The pullback has happened. We talked about this. And I said, hey, look, I pointed out last week that there's inverse head and shoulders. This is the time to buy. Are you going to buy? What are you going to do? Let's give it perspective, shall we? And now, today, as we speak, we're at $3.16. XRP moving higher is also warning you, XRP will be used for liquidity, not just for cross-border payments, but it will be used for liquidity during the banking crisis. Okay? This is telling you something. Along with gold, silver, the subprime auto from Tricolor, okay? And we'll talk about where it's going to contagion into. And then, of course, the CMBS, commercial-backed mortgage securities. Okay, and Evergrande from China has been very, very quiet, right? But that is going to be the flashpoint. All the major banks have equity stakes in them. Okay, did you miss another buy point? Most of you did, because people are saying that XRP is going to crash, Bitcoin's going to crash. Well, it's not, because there has to be some conduit to which all these excess money needs to go to sop up all this inflation. And that's what XRP serves, but it's a utilitarian coin. This is the mark of the beast coin, folks. This is the central bank digital currency at its earliest infancy, whether you believe in God or not, or whatever the case is. This is something that you need to pay attention to. Okay, so now we have SPY. This is from a few weeks ago. It's moving higher in a blow-off top fashion, right? And so let's start looking at some of these charts, shall we? Okay. So let me bring this up. All right. So we know that we're a little above. We can overshoot a little bit. Okay. We could just adjust these uptrend line, but we are near the top. This is the Trump pump, and this is what we've gotten on lower volume, lower breadth participation with divergences galore. We are at market tops. Okay. What is going to be the flashpoint that brings it down? Is it the subprime auto, subprime student loans? Is it going to be war? I mean, what is it? I have no idea, but time will tell. Put to call ratio is at 0.58, one of the lowest it's been. It's been riding this basically the 200-day moving average. Every time it crosses over here, okay, we tend to get some changes. Okay, so this is in relation to S&P 500. As the S&P 500 goes, this is telling you about the euphoria that's forming. Okay, this is a contrarian indicator. Okay, let's talk about the SPY really quick. Okay, rate cut language, and then we had this, sell-off after the rate cut hope language at the Jackson Hole. We did another rate cut language at Jackson Hole. Yeah, moved in up a little bit higher before crashing back down, and so that's kind of where we're at. And then this is in our group, and I wanted to share with people that are watching this on YouTube. This is 2019 FOMC meeting. As they were cutting, the language of cutting, as the market was making all-time highs into the December. And you know what happened at the end of January and middle of February? We had a massive crash of 35 to 40% crash in the SPY. It's following the same trajectory. Pause it and take it. If you guys want this PDF, I can send it to you. Just email me at coachbrandon@protonmail.com. Okay, so just to reiterate, the reason why this is important is because I think we're running into that parallel because the stock market always rhymes a little bit, doesn't it? And during 2019, we just had, if you remember, if you were trading during that time, we had the market just going up and up and up. And in fact, if you pay attention to this last bit into the November, into the December, I think we're coming up into that point. And so when Fed basically cut another rate ahead of what that came, the COVID, and this is right before that happened. After they cut, it just went higher. And I think we're in that very similar thing. Not exactly the same, but I'm waiting for this blow-off top climax type of run to finish. And I think we're coming up to that very, very shortly. This is the kind of that blow-off top that we're putting in right now. It just goes up and up and up. After a little pullback, we just had a little bit of a pullback about 3-4 weeks ago, and we're moving higher. And so this is what leads to that. And the scenario and the fundamental aspect of the market is very, very similar to this time frame. Okay, so keep an eye on that. Again, if you need this, I have a PDF format. You just need to email me. Okay, let's move to the next one, which is silver. Very, very self-explanatory. We're in phase 2. We're maybe starting that phase 3. Okay, here's phase 1. We're starting the phase 2 here, and then we're gonna start moving vertical on silver. Everything is positive, and a lot of people are looking at the RSI and saying it's overbought. And the thing is that there is no such thing as an overbought, oversold indicator. It's just that the momentum is very, very strong and it's trending, and there are no divergences on this right now. You see the MACD histogram is moving higher. It's basically separating out from the signal line. That's bullish, folks. Okay, commodity channel index. Yes, we pulled back and now we're basically forming this bullish divergences right here. We have a stochastic crossover, and guess what? We have this cupping formation that's forming right here, right? That's a PPO ADX crush indicator that is positive or bullish. Okay, and then of course we have our ATR just kind of flattening out. Whether we move up or down, it's basically saying a big move is coming, and you know the silver has been suppressed. Okay, so that's what it is. Here's our cup and a handle from the current perspective, and what we've got is we're basically, look, we're beginning to get a little more parabolic, right? I'm telling you, this $50 mark, the $49.95, $49.45 is the all-time high. This is the prior at 2011, but $49.45. I can't talk this morning. Was in 1980s. Okay, let's look at gold. Gold, is there anything? It's basically getting back into this channel. We pulled back. We're right on that line. Everything is bullish, right? We have a MACD crossover. Again, commodity channel index at these extremes can be construed as one of the negatives because it is contrarian, because it means that it's getting overheated. But you know what? Sometimes it can stay overheated. And based on everything else that we're looking at, look at the PPO ADX, bullish. Okay, silver and gold are moving higher. Gold is moving, I think, to at least 3,900 to 4,200 shortly, folks. I said the tricolor contagion is going to be contagioning into some of the other sectors, which is auto dealership. Carvana and CarMax, I'm going to be covering, is basically a used car auto dealership that basically originates their own loans and relies on Tricolor to buy up their loans, right? And then they tranche it and sell it to investors, just like they did in mortgage crisis, but for subprime auto, and it's over a $2 trillion market. All right. So Carvana has not been disclosing their loss ratios on their loans that they originate on their own because they've been keeping it hidden. That's what led to this rally that's here. But we're topping out now. We have RSI divergence. We're sitting right on that 80 MA. If that breaks, folks, we're going right into that 50, maybe to the 100 SMA movement. I think that this bottom trend line that basically it broke up is basically headed there. Here's the 200. I'm not saying it's going to happen overnight, but something big is about to come, and that tricolor, you ignore it at your own peril. Here is MACD death cross forming. Histogram is negative. We have negative divergence on commodity channel index. Stochastic is about to roll over. PPO ADX, this is about as bad as a crush indicator there is. When we saw this right here on the crush indicator, we fell down, right? We moved from 263 all the way down into this pivot line, 161. By the way, this is the major pivot right here, okay? CarMax has been already beaten down. CarMax is in serious trouble. Here's a descending wedge triangle formation, and so basically it keeps failing right here. Everything is pointing there's more downside. Not as much meat on the bone as CarMax. CarMax is our favorite, but not CarMax, Carvana, but CarMax has more downside to come. It's just starting to move lower again, folks. Look at this downward descending slope. It's going lower, and there's going to be some bankruptcies coming, just like in 2008. Could it be in one of these guys? Okay. United Healthcare, however, keeps getting stronger. We call the bottom here. We started entering as a group into this area. It's got more upside. We may hit some turbulence on the bullish side, 377.71. But if we can overcome that, it's going to 415. We talked about that extensively in the group. SMCI popped a little bit. What else is new? It hasn't changed much. Here's the bird's eye view of what's going on. Just because they struck a deal with Nokia, which is no longer relevant, it doesn't mean anything. Okay, it failed right off of this downward trend line. We continue to get shorter on this name, and here's basically where it's going. This is fraudulent company with fraudulent accounting. Okay, I'm not going to get into details about that right now. Okay, so that in a nutshell is what we're covering, and and that's what we did. And we looked at some charts that we covered last week and this week, right? Here's the black swan situation. Non-farm was at 22K revised for June, and that was the harbinger of things to come. But annual revision of negative 919K jobs puts into question about how good are these statistics and how truthful are our reporting agency doing, and how strong is our economy for losing that much jobs. Gold is at historic highs. It's telling you something. It is a divergence. This is the black swan that we're talking about. Silver slam is not working, and it's above at 42. Silver is about to explode, folks. Physical silver, physical gold, folks, best. But if you must, then you need to learn how to buy the futures or futures options, right? Tricolor deja vu of 2008. It's spreading, folks. Look at CarMax and Carvana, at least over there, and it probably will spread into it. It's a systemic thing that it's something is drastically wrong with the consumers, and it all makes sense, right? And no, it's not because of the tariffs, okay? It is because when you lie about your numbers, okay, it's a problem. It's a big, huge problem. Okay, so silver is going to hit 50 plus soon. It's not going to stop at 50, okay? Above 42 signals, it's ready to move on that level. Stagflation is coming. Gold and silver is warning you. Tricolor Chapter 7 Bankruptcy, pay attention to it. It's deja vu all over again of 2008. Nothing has changed. How long do I have to pound the table for XRP, XDC, and WLFI? It's not a scam. Go get them. Did you get them on that last pullback last week? Do you have silver or gold? Okay. Watch Carvana and KMX. FOMC sell the news as possible. And the question that everyone should ask, not likely, but you know what? Black swan thing is to say, what if Powell is just going to fight Trump tooth and nail and to maintain Fed independence, right? There's nothing governmental about the Fed, but he doesn't do anything. Whoa. Okay. Or what if they do cut 50 basis points and sell the news? I think that's likely. Follow me at galaxy.market, at x.com, and also like us and share us, and above all, comment on YouTube or on x.com. Subscribe, and thank you so much for following me. And if you want to join our group or have any business inquiries, you got to email me at coachbrandon@protonmail.com or click on the description below about how to become our Essentials member. Thank you so much. Good luck out there. Lots of crazy stuff happening, as you can tell. Bye-bye.